Homes. Now, you remember they had reported a fraud of 38 crores in July 2023. Regulator asked them to give us an update on the same. Abhishek caught up with Suresh Srinivasan Iyer, MD and CEO of Can Fin Homes, to discuss more on whether there has been any communication to the regulator from their end. Listen in.
See, after we reported first to the stock exchange, we did have a communication with the regulator, and they did come and ask for certain details as to the paperwork and what are the controls in place. So we have explained to them the process, and we have shared with them.
So the findings have been to the extent that you reported to exchange, that is about 38-39 crores. Am I right in understanding that?
Yes, that is correct. As we had reported that, we had carried out for the period from 1st April 21 for all the branches, and the figure is isolated to this one particular branch, and the figure is the same.
Will there be any forensic audit on this fraud? What is the update over there? Will you be looking to appoint someone, or will there be a forensic audit which can be done on the process that has already happened?
See, this is a particular incident which is related to one particular branch where the branch staff has actually colluded and tried to siphon off the thing. So the processes in terms of the reconciliation, everything is there. So we will we are in fact conducting the internal inquiry, and we will look into it. So internally, we are right now carrying out the verification, which we are broad basing. That's it.
So what are the steps that you are taking, with respect to IT enabling resolutions to stop such frauds, from happening in the future?
See, we are looking at three things basically as the immediate fallout of this incident, other than a few other controls that we'll be doing. But the main three are we are going for a CMS arrangement, which we had already planned before in fact, this was found. We had initiated the discussion already. Second thing is we are looking at centralizing all the disbursements. So this will, once it is implemented in a month or so, what will happen is, we'll be able to pull out the check signing powers at the local, which is decentralized right now. And the third step that we are doing is we are looking at centralizing the entire reconciliation. So there is a, central team which will be doing the reconciliation for all the branches across, which is also, once the CMS is enabled, will be possible very easily.
Well, we had the RBI policy. So what is the outlook on interest rates going ahead? Also, will there be any impact from the EMI, regulation that RBI intends to put out with respect to tenure of the book behaving in line with the EMI that you have?
See, first point about the interest rates, it's been, kept steady. So this should be a big relief for people. Because, we had a couple of banks which had increased the rate, so there was a little fear. But I think this will be a very good indicator. As regards the policy of, we'll obviously await the, the further guidelines that will come, if any. But there already are guidelines for Fair Practice Code and MITC, which is the most important terms and conditions which have to be disclosed to the customer. And we also have, this interest rate reset, everything which is upfront disclosed in the loan agreement. So what happens is in line with that only. And so I guess if there is anything extra, probably if the regulator comes out with, we will look at it. But already these things are in place. And we have been following the Fair Practice Code. We have been upfront taking the consent from the customer for the tenure change or the EMI change. We've also been upfront communicating to the customer at the time of a rate revision. So all those things are already happening. Let's see what new things come out.
While talking about customers, in your analyst con call, you did mention that there will be a flat to decline kind of a growth in business momentum in Q2 due to some structural changes at your end. So how do you expect business momentum in Q2 and for FY24 as well?
See, we have originally given that guidance for about 18 to 20%, which we will be sticking to. Maybe at most, in the second quarter, because of this, if there is some small blip or a small this thing, but still we are very confident because of the inquiries, the logins are still continue to be very strong. So there should not be much of a change. And for the year, we continue to have the same 18 to 20% guidance on the growth, loan book growth.
How do you see the net interest margin panning out ahead in the coming quarters? Will you look to, improve your net interest margin, or would you like to sustain it at current levels?
See, in the Q1 compared to March, we already saw or witnessed a little bit of improvement in the spreads and NIMs because we had opening 18,000 crore book, which was yet to experience a rate hike. We still, as of 30th of June, we still have about 12,500 crores of book, which is yet to experience one rate hike, which is about 35 bips. So there is a little bit of a upside which is available to us. And so we are quite confident that this 2.5% spread and 3.5% NIM that we are talking about should sustain.
With HDFC Limited out of the market for the HFCs, now how have things actually improved in the liability side of the business for all the HFCs or for players like you?
As of now, nothing much has yet been experienced because the banks are just about a month. This happened on 30th of June only. But going forward, I believe, or we are hopeful that as the loans that HDFC has availed from banks, they get repaid in the due course. There will be some available funds with the banks, which can be spread across other housing finance companies. So on that front, the sectoral limits can be a little available for banks.
Okay, get into a break on that note. We'll come back and we'll be joined by the management of Suryodaya Small Finance Bank to discuss their quarterly numbers. Stay tuned.